How's it going, everyone? Welcome to the weekly trading review for the week of September 2nd. This week, first red week in a while. Total profits negative 2,271.9. 11 wins and 4 losses, 15 trades overall. On the swings, I had 6 swings, 4 wins, 2 losses. Profits negative 2,277.25. And on the day trades, positive 5.34, 7 wins and 2 losses with no other trades. So obviously, big amount down this week. We're going to get into that in a second. I had taken the loss on my AMD long that I was holding for quite a bit. So we'll get into that in just a bit, but I will start with what happened with the market this week. I'll get into some of the swings that I closed, get into some of the day trades that I closed, and finish off with some of the open positions that I took ending out the week. So starting off with the market, with this gap down September 2nd, I think there was some news on semis that had come out. So the market had gapped down, and it had found support actually above this prior pivot low from August 20. And if you just drop in an AVWAP from here, you'll see that that actually comes right into play. At this level, so the market was found support kind of around there and closed the day green. So we had this big gap down. And now in this market condition, right, you can see how it is range bound with a slight bullish bias. So we're still making higher highs, but barely. And we're still making higher lows, but barely. So what you really want to be doing is shorting, if you're probably getting long at the bottom of these ranges when it finds some support. Probably here, and then taking gains when the market makes a new all-time high. Typically, it happens on some kind of gap up. It'll make a new all-time high, and typically on one of these moves up here, you can see that you get some sort of decent bullish day. You get a decent day here, a decent day here. Okay, there was a decent little day here. So I think you can get aggressive on swing trades on a little drop like that, on the notion that this should hold. And at the worst case scenario, you test the 50 and then you come back up. So that was the price action this week. Bullish for the week, but short term it was pretty, kind of last couple of months or so has been fairly neutral. Not a big drop, not a lot of weakness in August, and you can see any kind of dips have been gobbled back up, and that provides fuel for the next all-time high. The other thing that's important to note is that when we make a big move really fast, that tends to reverse back into this channel, right? So this is a big reaction from the jobs. It found support at this AVWAP-Q and then started to march hard to make a new all-time high. We got this drop again over here. Then we got this positive Jackson Hole response that poked up over here. Then we managed to push up to an all-time high on the 28th. We got this negative news on semis on the 2nd and happened really fast. Market found support, and then we pushed up to the all-time high on the jobs. Now, with this gap up here on news, you can see that we had some heavy selling pressure. This gap up on the jobs report came back down, tested the low here, as well as the 15 EMA, which is not shown, but I think I can probably add that. All right. So this 8 and 15, I'm using the 15 more. I have been liking it the more I use it. Kind of gives you a sense of, all right, they usually can converge once the market comes back down over here, and it's a little bit of a less noisy position on an overall trend. So on a very strong trend that you might see in a stock, it could really ride up that 8 EMA and not really touch the 15. On a market trend like this, you can see that we have touches over here, which still confirms that it's bullish. And we don't spend a lot of time. Now, after August, we spend a lot more time poking below this 15 here, which just tells us that the trend is pretty weak. So my forecast kind of for the rest of this month, I'm kind of neutral to mildly bullish heading into the FOMC. I don't see a lot of catalysts that can knock this down. There have been some weakness in the job reports. PPI ticked hotter last month, and we're going to get that coming up this week to see if there's going to be a one-off or maybe the start of a trend. We'll see if that affects CPI as well, because PPI may often spike up first, and then CPI may follow suit, since PPI is the inputs for that. So, yeah, we'll kind of see what happens this week. I'm not too worried about the inflation numbers. I don't think they've had a massive response in the market. They've been sort of devalued, unless there's a crazy big overshoot or big upset that's way off the mark. I don't see it changing. To me, the theme of the story here is the market is pricing in a 90% chance of one rate cut and a 10% chance of two rate cuts. So even sort of bad news over here. Bad news, I think, is good news. Good news is bad news. So I think the optimism will at least keep the market afloat. And if there is any sort of little dip, I think it'll be gobbled back up and it should provide fuel. So whenever the FOMC comes out, which I believe next Wednesday it comes out for the next, I'd say for the next week and a half here, I'm neutral, bullish to mildly neutral, or mildly bullish to neutral, I should say. And that is keeping me mostly on the long side, but I may take an occasional short or two. Okay, so let's go over the swings for this week. I'm going to start with the big loser here, which was AMD. So give me a second here as I pull up this chart. All right, so AMD bullish chart. Now, I took this long all the way back in here on the 13th looking for an overnight swing to the upside. So I took it at like VWAP, which was 130, around 183, sorry. Let's pull this up over here. Oh, sorry, I'm on the wrong trade log here. Here we go. So I was long 45 shares at 183.75. I added 23 shares end of day at 184.50, so my average was 184. The next day, it poked up a little bit. I had a chance to take $1. I didn't because I chose to push up to the high. AMD ended up reversing against me here. And initially, right, on this stock, it pulled back here, and I'm like, all right, look, it pulled back a little bit. This trend is still pretty strong. I think we have another attempt to push through to this high over here. So still feeling fine on the 18th. There's the first warning candle on the 19th. And if you look at what's spied on the 19th, it sold off a little bit here. AMD was selling off before, so with some market selling, it pushed down here. So I wasn't a crazy big fan of this candle. Not a terrible place if you wanted to exit. But I was like, look, this D1 chart is still pretty strong. I still have this pivot low to lean on and the 50. So I'm willing to hold that until these things start to break. So tested over here, pushed up, and you see as the market tried to rally here on the 22nd, how AMD couldn't really rally up with the market. And the best exit I could have gotten here was around 171. I believe that's the best one. Yeah, that's the best one I could have gotten over here on this gap up. On August 28th. So that's not a bad entry if you time with the market, but still I was like, all right, well, this is compressing here. If it can break above this trend line, get through 174, I don't mind adding to the position. Did not happen. We tested the 50 again. We made a marginally low over here on the September 2nd gap down. So I'm still holding it, but it's not looking great. And it's chopped around the 50. And then on the 5th, this was the big tell. So market gap up to an all-time high and then rejects. AMD gap down and breaks below this priority low pretty easily. A lot of volume on this guy and starts to get through this gap. So when that happens, I took the loss on the position at 151.75. So that was a $22, or sorry, I think it is a $32.25 loss per share on a 1.5x position. So, I mean, overall, I've a couple good things I want to point out on a trade like this. So I think technically, I think I played it totally right. You could say, hey, maybe I should have entered here, or maybe I should have entered there. But you look, I knew the risk when I took this leading back over here, and leading on this 8 EMA support. So I chose to hold through it, knowing that there was a chance I could get not this guaranteed loss and a scratch, or there's a chance that I do get a bigger loss if it doesn't turn around. And that's what ended up happening. Another interesting thing to note here is that the halfway point of this candle held pretty well. We never got back into this red candle, which was one of the clues that we're starting to lose its relative weakness. But yeah, I mean, mentally it was like, all right, take the loss. It kind of sucks, but I know that, you know, I'm still up for the year. I think I'm break even for the quarter. So yeah, is it unfortunate? Yes, but I don't know. I've taken a couple of big losses before, so I think emotionally I feel pretty unfazed from this. And sometimes you're just gonna take that. It's gonna go against you, and it's gonna break all support, even on a nice looking chart, and you just get hit with that sector rotation. One learning experience though from this is that at this month, as you may know from the previous video, I'm experimenting with really those fixed debit swing options. So either deep in the money calls with a max debit of 1.5% of my total account, or $450, or an out of the money debit spread with that same amount of risk. So I'm going to see if those things do two things, which is one, cap my downside loss on any single trade, and two, increase my upside on trades as they hit my target versus what I get from shares. So I'm seeing it that, all right, if I had this strategy, right, so if I had that strategy and I took AMD, I probably would have expired worthless for a max loss. And even if I had added to the trade, right, so let's take $450. If you add 50% to that, that's going to be $675. That would still be a $675 loss versus a 2.4 K loss. So that is a plus 1,800% or plus 1,800 gain on that from not really doing anything except changing up the strategy and adjusting the risk reward over there. One other thing on this AMD is that into this amount also includes a hedge I had taken here before the Jackson Hole statement that I closed for a loss the next day, which was about $170. So that added on top of that losing hedge to the total amount. However, I considered it a hedge on the open position as kind of part of the same strategy. So even though I recognize that loss on my, it kind of incurred on my account, in terms of just tracking it in terms of the journal, when the entire position is closed, that's when I take the full loss. Okay, so that was AMD. Yeah, I mean, outside of the big loss, it's kind of a straightforward loss. Hey, broke support convincingly on heavy volume, get out of the trade, take the loss, and move on. So next short that I took, or next trade that I took, was a short, and that was UPS. So I took this short over here on the 22nd, and I took it as a hedge on my long positions going into the Jackson Hole meeting. Jackson Hole came out, big long green candle coming all the way up to that support, and I was short the 919.90 puts for $4.90. So short there, pull back against me. I'm down 50% on the trade the next day. Holds this high right here, which I thought was key, and it starts to erase this long green candle fairly quickly. And one thing you can note is that compare this to the AMD chart where I was giving AMD all this time to try to make back some of the gains, but it didn't. But if you look at what happened with UPS, this got smacked down. We start to compress. We start to test this low over here, and then we actually get the breakdown on September 2nd. So we get this breakdown over here through a low minus trend line. UPS, it had some support around 84 and some support around 82. There's a COVID low at around $82. And also on top of that, you have this low minus trend line coming into play over here that, sloping downwards, also kind of just above 82. So there was some support here, but I cracked down on the second over here. And I gave it another day on the third because I wanted to see if it could test and maybe break through 84. You could see that it did after on the fourth, but I ended up taking gains on the third. I took gains at the middle of the day at $5.35, which is about a 10% profit. It wasn't really able to break 85. I saw there was a lot of open interest at that $85 level, so I was wondering, all right, maybe we'll see if that actually provides support or not. I'm still kind of experimenting with these open interest stuff to see if that provides strong technical support or not. Typically, that should align with some of the market technicals, right? So if I'm looking at this chart and say, okay, well, there's a lot of activity, put activity, call activity at the 85 level. Support is just below 85. Okay, that kind of makes sense. That sort of lines up. So I expect that to maybe hold for a little bit. Now, how strong that level is kind of varies, right? In this case, we broke down it pretty quickly, but we're chopping around this area over here. So you can maybe take gains. And there's a couple times where you could push a little bit lower here, push a little bit lower here, but I'm not crazy fan of this price action. The market was rallying back up over here on the third. And the reason I also took out on the third was just in case the market erased this candle and moved lower. I didn't think that was a likely scenario, but if that did happen, I thought UPS could continue on the downside. So that's why I didn't close it on the second as it approached here. I gave it one more day, and I closed it on the third. So that was UPS. Next one I took was Snow that I closed. So I took Snow long, end of the day here, at 15 shares at 240.80 near VWAP. I added 5 shares to the trade the next day at 237.08. And had a small chance to break even on the trade since my average was 240.05. Snow came back, test over here, and then it tested its gap and poked through. And then on that poke through earlier the day on the 4th is actually when I took the loss, because it made some nice strong moves lower. It had broken into the gap, and I thought, all right, well, this is probably going to keep going down, and I was wrong. So it poked the gap and then reversed, kind of backed up. So probably need to give it a little bit more time, but I ended up taking the loss at 216.10, which was pretty much around my max loss at $24 per share, or I guess $23.95 per share loss. So that was another loss I took on that. This was a bit of a riskier trade on this giant gap up. There was a chance that it can continue, and I thought I could get to 250. There's also a chance that it would break through the low here. So when it started to break through the low early, I ended up cutting the trade on that. Now, I probably could have gotten a better exit somewhere over here on this bounce. So $10 better exit is probably possible. But yeah, again, this one of the risks with the shares is that since I don't have a fixed loss, right? If the more I give this time to trade, it's like if it does go against me, I am right. The more I hold, there's a greater chance of risk, but also a greater chance of snapback. The less time I hold, I may take a worse loss in some losers where I can maybe get a better loss on them. Okay, that was Snow. Other share or other trade I took was App. And while this loads, just pulling this up. Okay. So let's get App here. All right. So I went long on App over here. I went long at on the 29th, 5 shares, end of day at 481. Now, the market gapped down the next day, and it found support. If you look at what App did, it gapped down, tested the 8 and the 15, and came right back up and pretty much started right where it closed on the 2nd. So after that happened, I added another 5 shares at 480. So my average was 480.50 at 10 shares. And there was this high plus trend line somewhere here, call it like 40, and it's a little bit off here, but maybe like 492, 493. So I was like, all right, I'm going to just have an open target at 491.11. So it's about $11 gain per share. And on a gap up, it'll probably hit that, and I'll take some profits. So it happened, hit that 490.150, and I took gains on the 11th. So that was a nice little win on the trade, and obviously it pushed up a little bit higher, but it got included the S&P 500. So if that inclusion went against me, I would have been not in good shape, let me tell you. So nice little kind of a swing scalp over here that I was able to add to. Next trade I had taken is WDC. This one ended up being an absolute monster, but took it over here. Kind of middle of the day, I took it around right $80-ish. And this absolutely took off. So, yeah, I took it around here, and you can see that it was kind of grinding up higher on the 2nd, and it did really well relative to what the market was doing. So I took the September 19th 82.50 85 call debit spread for 92 cents, 5 contracts overall. So took it over there, and then my target was 85, And I figured, all right, well, at 85, I mean, it's probably going to, that's where there's a whole bunch of open interest. So figured that that's not a bad target and not a bad place to take gains. So we gap up and we hit 85 basically the next day. And I get out at $1.50. So that's basically a 60% gain on that overnight, which was really nice. And it did end up pushing up a lot harder, which was pretty wild to see. So I think it probably is. I'm going to check it right now, actually. We'll call spread. But that is, it was doing pretty well. Yep, so that is currently trading at $1.87 right now. That's where it is, where it's pretty much currently trading. So it is doing pretty good. I think it's actually doing a little bit more here. No, I'm sorry. It's actually trading at like about 225-ish. So that would be about I think a 150% gain or something like that on that. So massive move on that, but I'm not expecting this to be a full I'm not expecting to get this massive move up here. I had a big gap up. I thought it was maybe a little bit overextended. Could come back over here and then exploded up again. So happens. But took a really nice win on WDC, and that helped offset some of that loss on Snow. Last trade I took was Light, L-I-T-E. So I took it over here on the 2nd, and I took the September 19th, 135, 140 call debit spread for $2, and I took 2 contracts of that. And again, I was targeting 140. There's a lot of OI there, so I figured it could kind of blast through it. And then pushed up over here, and then it pushed up to 140, kind of somewhere here on the 4th, and that's where I took gains. I got out at $5, I got out at $2.60, so took 30 cents overall per contract. And again, did push up again a little bit higher. I think that is probably trading pretty nicely right now, because again, I was not expecting this big move up on the 5th as well post this level. So again, another one cut a little bit short, but hit my target, so I had taken gains at that point. So those were all of the swing trades that I took. Let's go into the day trades. All right, so just was checking Light here. That is currently trading at about just over $4, for $4.10 maybe. So that is a 100% gain on that guy. All right, so first trade over here, first day trade, is BE. So I had taken BE as a day trade on the 29th, and it did not do as I had expected. So let me see what's pushing it up today. Did it get to 60? Did not quite get to 60. It's sort of the next level here. So where is the 29th? Over here. All right. So basically, I was like, all right, look, inside day. Found some support early on the 29th. You can see market is pulling back, but BE is holding up pretty well. So I bid a little bit lower. I got it into 53.80, 1 share. Now, flatlines the rest of the day. I was like, all right, well, look, I guess I'm going to scratch out of the trade the next day. Big gap down overnight. BE gap down, and then a very strong move initially into the gap. So I added to the trade at 51.80, and I have 2 shares long at 52.80. And I'm looking at this gap fill, maybe seeing if I could scratch it, seeing what SPY does. And I'm going to pull up the SPY chart here so we can kind of compare day by day. Yep. So you can see the strength of BE over here on this chart where, again, markets gap down, BE is pushing up, makes a new low, BE makes a new low, lower high. So honestly, this was probably a better entry over here at around 50.90, I would say. So I jumped the gun a little bit, but I felt that I could fill in the gap with this really strong price action. So that's probably where I would have added again, but I don't want to average down more than once. Next day, filled in the gap here. I had a chance to take a small profit if I wanted to, but I figured that, all right, I mean, if it filled the gap and broke through the gap pretty early, it got dragged down by the market here a little bit, pull back to VWAP, and I was like, all right, I mean, I'll probably be able to take gains on the next push up the next day. So the next day it pushed up here, and I was like, all right, if I can get $1.50 on this, I'll be pretty happy. So my average was 52.80. $1.50 would have been 54.30. So I put an order out at 54.30, and I took $1.50 on 2x here. So ended up being a bit of a swing trade, unintentionally. Yeah, obviously it pushed up a little bit higher, but again, I had the profits on a nice day. I didn't want to. I also had a couple of longs on, so I didn't want all that exposure. Took off BE, took a nice gain on that. Next trade I took on the 2nd. I took 2 trades. First was Tesla on the 2nd. Where is Tesla? Yes, okay. So Tesla had broken up above this 200-day SMA and very early trade. So market had found support and was pushing into this gap pretty early. Tesla, small gap down and quick rally above the 200-day SMA, so I was looking for a bounce. So I was long Tesla 332, and I was looking to get over here 334, maybe 333.50, looking for $1.50 on that. Didn't quite get there. You can see that high 338, so just missed it. And so I took a 10-cent win on this at 10.20, so took it right around here where I got this double top hammer here. I was like, all right, I don't really like this. I'm going to get a small win and move to the sidelines on this, and then if it sets up again, it sets up again. Maybe if it pushes through the gap, I can get a fill on Tesla. So took a pretty small win on Tesla, but nothing crazy. Next trade I took actually was AXP on the 2nd, which had pushed up here, right? So it held up really well and pretty strong chart. Hit a little bit of resistance here, but felt it looked pretty good, at least for an intraday basis compared to what the market was doing. So I went long AXP at 32.70.60. So I got filled. It was pushing up over here. This was the setup. Nice long red candle. Immediately erased it back in the gap. Pushed up to a new high. And I was like, all right, if I can get a fill, kind of around this high here, right? That's not a bad place to get long. So got in at 327.60, but it got filled on this long red candle. Pulled back to VWAP and held, but at this point, see what the market was doing. It was looking pretty bearish on the day, right? It had rejected off the gap. I took it pretty much right around here. Market was moving down. AXP hitting VWAP, popped up a little bit, and I was like, all right, well, market's still selling off here. This could have some more downside, so I'm going to scratch out of the trade and see if it sets up again later. So exited this at 327.61 on this pop over here, so it took just a 1 cent little win. And then I set a downward sloping alert line. I ended up missing this entry over here at 12.55, but this was the entry that I would have taken. And you can see that at this point, right, the market marginally low, poked through, and then moved back in the gap with a little bit of strength. Not quite at VWAP yet, but this is a pretty nice setup in the stock. Broke this downward sloping trend line, held VWAP, kind of right at this level over here. So there was a nice amount of money to be made to the upside, and especially on the gap fill over here. You could have targeted that gap fill, and that's a nice little. How much is that? Let's call it 327.50 to 330. 331, maybe 330.50. So there's maybe $3 in there. So that was AXP. AVGO was another one that I took. And this was on earnings. So AVGO, I took this on the 4th. And actually, before I forget, I'm going to set some alerts on this guy. See if it can't break out of that candle's range. So AVGO took this on the 3rd. So I took it with not a ton of time going into earnings. So it was over here, and again, this was a nice strong stock early in the morning. Took it at the close of the 11 o'clock candle, so took it right around here. I got filled on AVGO 303, so got filled right over here. Pushed up a little bit, so already actually I had a pretty much almost $1.50 on this guy. But I think I was pushing for maybe $2 to $3, considering that this was holding up pretty well. AVGO stock had pulled back a little bit, and I didn't like that. So again, on the next push up over here, market had broken through VWAP. I didn't know how much it would go further, so on the next pop up on 12:05, I had scratched out of position, I believe at 33.3301. So I took this pop right at 117. Yes, so I took it right over here. So got in over here, held down through VWAP, and I got on this bounce here because it had this downward sloping bearish channel, and didn't really want to mess with that. So got out for a 1 cent scratch, pushed down a little lower, didn't really come back up to my level for the rest of the day, so ended up being a nice exit. Let's then go to CLS on the 3rd. CLS was a nice winner for me. So took it on the 3rd over here. You can see pretty strong daily chart, and had some resistance here, maybe a little bit of resistance here, but pretty nice chart overall. So CLS, you can see small gap up, right? And this is a day, look at September 3rd. So September 3rd market, small gap up and kind of flat for the day. CLS, small gap up, kind of grinding up higher. So I took this trade at the 11 o'clock candle as well. So took it right here, got in at 210.90, which was a nice little entry. Stock probed up a little bit and then boom, dipped to VWAP and then pulled back. So was not obviously a fan of that, but the market was going a little bit lower. So at 11:46, right? So we got this bounce here, added to this trade, got in, added at 209.90. So my average was 210.40 on 2 shares, and I was expecting a move up to the high of the day. Looking to take maybe $1. Pull back up over here to the VWAP, held, pushed up. Another move lower to VWAP. We got this long red candle, and then immediate engulf back over here that held. And then we started to break through this high minus trend line over here. And I added to the position right over here at 330. And you can see the market had made a long base. Bearish cycle did not produce. We had held and found support at the gap, and we got a rip up higher at the end of the day. So added right here when the market was at, again, 335. You can see how this stock had rallied before the market. It held VWAP, nice green candle here. And I figured there was some end of day buying that could come in on the stock. So I added one more add here at 210.10 is when I added to the trade. So now I have three shares of this guy at two. I believe it's at 210. I think 210.10 was actually my average, and I took gains over here at 211.40 on this candle, this 350 candle. So that was $1.30 on a 3x size, and that was a pretty nice win. I think my biggest win for the week. All right, and then third, another trade over here on the 3rd, which was DLTR. So took this as a bullish gap reversal trade post earnings, and DLTR. It was kind of choppy here, hitting some resistance, popped up into the gap here at 11:35, and on this move lower, you can see how. Let's get up to the 3rd, right? Let's just get the same time frame. All right, So as the market was pulling back down here, DLTR held up pretty well. And then we got this pop up. So I was long this stock at 103.70. And I was targeting the prior day AV VWAP, which is around 105-ish. Stock pulled back to VWAP over here, which was unideal. Usually these tend up moving out pretty fast. But pulled back to VWAP, and then we broke through VWAP over here at 2 o'clock. And you can see how the market also had kind of sold off a little bit here, but wasn't super weak on this 2 o'clock candle. But again, this from 145 to 205, from 145 to 205. Market not down a lot, but this stock had given up some of the gains, and it was unable to really get through some of these levels here. So I took the loss on that guy. I entered at 103.70. It got out at 175, so it's a $2.95 loss per position. I did have a chance for maybe a better exit somewhere here, potentially $1 or so. Sometimes when you get these VWAP breaks, they may come back and they retest VWAP. So on that notion, you could have gotten maybe $1 better exit. But yeah, I mean, broke through here with pretty convincingly, so wasn't going to stick around, especially on this big drop here. And occasionally that happens. One clue on these gap reversals is that if the price action is strong early and organized, then you can trust it. If the price action is kind of choppy, it's a lot harder to trust that position. And, you know, it can tend to go against you. It's often because there's probably some high volume stuff or some AV WAPs or something like that that's kind of getting it stuck. And that's why it's providing this little barrier into that. So that's, kind of one thing to keep an eye on these. Okay, let's go to the fourth. And first trade I took was MSTR on the fourth. So this was a quick little scalp on MSTR. So on the fourth, gap up, kind of flattening here and started to move down a little bit. MSTR, small gap up and then some strong price action early. That's the fifth. I was looking at this here. Flat open and then steady selling early. So this was looking good. And then I got long on this candle. I saw the opportunity. I got bid a little bit higher. I got filled at 323, and I was targeting $2 at around 321. The reason being is that at around 320.30, there was an AV WAP coming into play, a pretty significant AV WAP. So let me see if I can find that. MSTR. I'm going to hide this VOLD, which I was checking out over here. Yep, so you can see what is this green AV WAP? Well, this is all the way from over here. And this stock has come down, bounced around it. That's sort of a line in the sand over under, and it's kind of been chopping around those levels. So I thought, all right, I mean, that's going to provide some support, and you can see it is providing some support on that stock. So took $2, quick in and out of the trade, which was a nice little win. And that was that on MSTR. Next one, ASML. Took this trade. Actually, probably a pretty nice one to take a swing on overnight. Nice, ton of momentum on this guy. So ASML, I took it on, again, this is the fourth. And it had broken above through the 50 SMA, which at the time of that was I think maybe a little bit. It was kind of around this level. It might have been a little bit lower, this 50 SMA. So it had broken through the 50, but kind of chopped around this gap over here at 735. So off this bounce, off it over here, it started to gain a little bit of relative strength. But the main thing I liked about this stock on the fourth, and if I go back to the fourth over here, is that broke through here, pulled back, and then it's starting to make some higher highs. Now, market was pretty steady, so there's, some stocks won't be able to keep pace as well, but I figured, all right, I mean, it's a choppy stock, so it's going to move up and down, and, even if it's not totally relative strength, the fact that we may have some higher highs and higher lows, let me go back over here, and as well as we had a trend line break here, trend line break over here, so we're starting to sort of form some support and potentially push up higher to the high of the day. So I got in at 752, and again, I was just looking for maybe like a $2 move on this stock if possible. ASML had pulled back, then found some support here, and then popped up at 242. And then when it kind of started to stall over here, I actually took a tiny loss at 750. I don't know why I said 252. Got in at 752, got out at 751.50. And so cut that as a small loser. I think I definitely could have scratched out of this trade. I was targeting 1 cent, but I just wasn't super confident given that there was earnings on AVGO coming out, so couldn't hold it overnight, and also didn't quite confirm above the 50. So, that was that. So, took a tiny loss on that, but that was pretty much it on the 4th. And on the 5th, I had taken a long on Tesla, which was I think my shortest trade of the year. It was literally a 14-second trade. So you can see market had held the gap, and on this long hammer here, I like that, and I got into Tesla, and I was over here. I was bidding lower on Tesla at 354. Next candle, instant red smackdown on Tesla. Like, this whole candle was erased real quick, and I got my fill, and I was like, what the heck? I don't know what's happening, but I'm going to get out of this stock. So I set an order out at 354.22 or something like that, and I got filled at 354.38. So took a tiny little 38-cent win on the stock, but it was really just I got filled. But this instant smackdown, I was like, you know what? Like, gap fill, it's still pretty early in the day. We still could get a gap fill reversal, so I'm going to get out of this trade. And, I'm just going to see what happens on Tesla. Ended up working out. So those were all the day trades I had taken for this week. And I'm just going to go into some of the open trades now that I have. First one that I have here is Bull. So Bull, this prior week, I had the $19 calls for 15 cents. Bull had moved a lot lower. So let me pull up Bull here. It moved a lot lower, so exited those calls at 3 cents earlier that week, and took a 12-cent credit on that. So the total premium is 106 so far. So just kind of keep knocking down that that percent, that cost basis. So of my 670, I am 16% of the way cleaned up on that. So I didn't take any short calls to end the week because it was lower. I wanted to wait for a bounce that I could take short calls on, and I'm actually currently short the 1450 calls, which I don't like to do that because that's lower than my 16. My deep in the money calls, because my break even is around 16. But I have quite a bit of resistance in my way, and I'm not sure if this is going to really pop up or not. So I can always close it probably for a scratch if it starts to pop up in the next couple of days, given that the time premium decay is going to offset any of the delta gains on that stock. So that was Bull. Next, other trades that I had taken long. First was Reddit. So I took Reddit on 9.3. It had popped up initially, and then it kind of got smacked down in the gap. Today is a little bit down right now, but I was able to erase those gains pretty quickly and actually come back, and even on Monday today, test the highs. So on Reddit, I had taken the 240, 250 CDS, the September 19th CDS, for $3.50 a contract. So I'm getting some really nice odds here, basically a 2-to-1 risk reward on this trade. And I have some time for this to work. So if once it hits 250, then I'm going to be in pretty good shape, and I can take gains on that trade. So that's Netflix. So still long on Reddit. Sorry, that's still long on that, and probably expecting to close it out this week. But let's see what happens on the stock. Ideally, this is not really a double top, but I don't really like this selling pressure on that today, so I may close it a tad early if it's really not able to recover this candle quite quickly. All right. So Netflix, I had taken it on this break over here around 246. So I was long the September 19th 1265, 1270 CDS for $2, which basically has my target at the gap fill. And this close over here is 274.17. So if I hit that close, I should be able to take, close to 40 to 50% on that. So just kind of watching Netflix over there. And then the final swing trade that I had taken was AFRM. Stock had broken through post earnings. Stock here sold off here, found some support, and it had poked up above the AVWAP E and closed above it on the 4th and pushed up a little bit high before getting knocked down on the 5th a little bit. But I really like the relative strength on the 5th. If you look at what's going on the D1, right? SPY had basically gone down and almost tested the prior day's candle low, and this candle did not do that. It actually held this gap up here. A little bit bearish today, but kind of chopping around on the chart. And I took the September 26th 95 100 CDS for $1.38, and took 3 contracts of that. So again, I'm getting a pretty nice payout here, about 2 to 1, I believe, on that. So yeah, I mean, typically on these CDSs, you want to get less than 50% of the price. So on a 95 100 CDS, you want to pay less than 250. But ideally, I try to get less than 40% on some of these out of the money ones. So if the closer you can get, where you can get like your max upside is like 150% gain or a 200% gain, that's going to be a really nice price. So that's kind of the strat here. But yeah, I mean, it looks pretty good. There's again a whole bunch of OI at 100, and the price action confirms that at 100. So that's kind of my target. I'm giving this trade time to work, and as long as it continues to ride up this 8 EMA and push up higher, then I'm going to be good to go to stay in the trade, and really just matters if I hit my target. So just watching that, I want both of these 8 and 15 to hold, and that's pretty much it. So those are the trades this week. So overall, I mean, pretty much just that one big loss on AMD. Outside of that, I think decisions made were good. Took some couple nice wins on these out of the money trades, and so far I think the risk reward is paying off on these. I'm getting anywhere from 30 to 60% return on these, so that's looking pretty nice. Next week I will be on vacation, so I will try to get a weekly trade review out on Friday for this week if I can, but then if I don't, it may be a week or two before that comes out. So I will post the trade log, as always, in the description, and that's it. So again, took a loss this week, not really too shaken up about it. And just kind of focusing on the next couple of trades that I need to look at, that I need to take, and just taking it one trade at a time, moving on. So, I think if you had a big loss sometime recently, or you're kind of struggling, you just got to take one or two, and they'll knock you down, but you'll kind of learn from that, and it's really just about how you improve and how you learn, and what changes you decide to do in terms of managing that loss, right? Whether it's you have bigger winners because you add 2 winners, maybe you change to an option strategy to have a fixed loss, so on and so forth. But the important thing for me on AMD was that I'm not second guessing my decision to take the trade here, because I know that a lot of my overnight swings and entries, it was a good setup, and just didn't work this time on me. All right. Thank you for watching, everyone, and I will catch you all in the video next week.